February 2014, the CBOE Futures Exchange began listing contracts on the Short-Term Volatility Index, a 9-day variant of its flagship 30-day VIX futures. John Lothian News spoke with CFE's Jay Caauwe about the launch of VXST, its liquidity and viability, and the market segment who will be trading this product.
Volatility has been more accepted as a mainstream type of product. Debate exists whether or not volatility has indeed become an asset class. Certainly, judging by the amount of market participants that we're seeing come to the VIX space, I think you would find us in agreement with the asset class tenet of that proposal. VXST is an extension of that. So it complements, it augments quite well the 30-day product. And frankly, there are those volatility moments that occur that in one precise moment in time that perhaps the 30-day product doesn't get you the action or the return that you are looking for. So the ability to offer a product over a shorter time horizon using that VIX methodology that folks are now more familiar and comfortable with, I think speaks to the demands of the marketplace. Certainly, term structure plays in the 30-day product have become very popular. So I think it's up to the market participants to take that same acumen that they applied to understanding more about the 30-day product back in the early days and seeing what opportunities present themselves with VXST. So if we look at 2011, I believe was the period when S&P downgraded the U.S. as a whole. VXST shot, if memory serves me, to in the neighborhood of about 80, where VIX, of course, would also spike based upon that news, but certainly not as aggressively as VXST did, and I think it was closer to the area of about 50. Our promotion and education awareness around VXST is that it's a product, a tool that's certainly going to be more reactionary and more relative around U.S. economic releases, corporate action, earnings, or that intraday vol spike that no one is quite prepared or expecting. There is a very deep, robust, and liquid market in the form of SPX. VIX, of course, being a derivative of that market, and VIX futures being a further derivative of that. So in terms of liquidity, think in terms of the backstop of the liquidity, and that begins with SPX. One might expect that the markets could widen out during times of market stress, but also market stress equals opportunity. So I would expect, much like we saw in the flash crash of 2009, where there were no drop markets in VIX futures, that the markets in the VXST and the 30-day product would probably see additional flow coming to the order book. And remember, with the product, like all products we list at CFE, we have a dedicated, designated primary market maker, the specialist, who is out there providing quotes throughout the trading day. Certainly, listing options on the VXST are in the works. We have not yet selected it or targeted a launch date for it, but following the standard procedure, when we list a new futures product, you would expect within 3 weeks' time, 4 weeks' time, the options to be listed shortly on the heels of the futures launch. And I think at that point, we're going to see additional liquidity come to the futures market as option players will obviously and of course need to hedge with the futures.